Hey everyone, welcome back to Nadlin Forum Podcast Daily. Ruby here, bright and bushy-tailed as always, and I've got Leah with me. Leah, how's your day shaping up?
It's good, Ruby. Busy with a couple of clients late last night, some surprises in the market, but I'm ready. This episode is a big one. You know, we don't get these regulatory swings every day. Well, not the ones that actually matter.
Yeah, this one's been everywhere, right? So for those who haven't caught the headlines, the Fed, OCC, and FDIC just repealed their climate risk guidance. That essentially rolls back what they did in 2023, when banks were supposed to include climate disasters, floods, wildfires, cyclones, you name it, right in their risk assessments and stress tests. But now the regulators are saying, nah, our old school standards are enough. Cheers.
Exactly. It's like we're back to basics. Traditional financial oversight, no special rules for climate stuff. They're saying the existing safety and soundness rules, whatever size you are, whatever you do, should cover the risks, even if they're from environmental disruptions. No extra climate-specific oversight.
The interesting bit is, it's a real change in tone from just 2 years back. Everyone was suddenly focused on climate as this big boogeyman for financial stability, right? And now they're waving the policy away almost like it was a fad. It kind of reminds me of one of those essays I wrote back at uni in Melbourne, studying how politics keeps swinging the pendulum on big issues like this. We saw exactly the same trick with energy policy, by the way. Whatever side's in power just sort of does their thing, then backflips when the winds change. Well, sorry, that's a bit of a tangent.
No, that's actually totally relevant. What changed this year wasn't really the risk. The science isn't different. It's pressure, right? You get politicians saying central banks should stick to interest rates, not climate. Powell, for example, keeps repeating that climate change is a long-term issue. But the Fed's main job isn't saving the planet. That's how we got here. The sense that climate was becoming a distraction from the Fed's so-called core mission of financial stability.
So let's talk about how the industry's taking it. Opinions are really split. Like, have you seen the Fed board? Michelle Bowman is basically giving them high fives for the repeal, saying it gets rid of the confusion and saves banks from extra compliance costs. Back to clarity, back to sanity, if you believe her. But then you've got Michael Barr, who actually helped put the rules in last time. He called rolling them back short-sighted. It's a real battle in the regulatory family, isn't it?
Yeah, Bowman and Barr couldn't be more different. Bowman's saying, look, climate's real, but too many rules. And she says it didn't really move the needle for stability. Meanwhile, Barr's worried the system just got more vulnerable. He literally said, this could blind us to real risks as the world gets more unpredictable.
It's funny, well, not funny, but you also see it with the banks themselves. Some of them spent a fortune getting ready for those rules. Like there's this huge US bank, I won't name names, but they built out a whole internal team for climate scenario reporting, carbon footprinting their entire portfolio. Now they're sitting there going, was that a waste of money? Should we just scrap it all?
That reminds me, one of my mortgage clients got caught up in this. He works in risk at a regional bank. They tried to get ahead last year, set up new climate risk metrics, updated credit models, spent months retraining staff. Now the guidance is gone and he's saying, should I tell my boss to keep going or just pivot and focus on the regular stuff again? The bank's board isn't sure, and it costs real money to reverse course like this.
Yep, and at the same time, you've got other banks, especially the smaller ones, almost relieved. They felt like climate rules were just copying what they already did for disasters, only with extra paperwork. For them it was, less paperwork, thank you. So it's a mixed bag. Depends how far people had to go to comply in the first place.
Now you zoom out and look at the bigger picture. It's not just about paperwork or saving money. It's about what the market expects long term. The US is kind of saying, let's focus just on financial basics. But in Europe, the climate rules are sticking. So now, US banks are getting relief here, but still have to answer to international investors who expect some form of climate planning. It's a balancing act, right?
Yeah, and it's such a political football in Washington. Whole different philosophy about what banks should be doing. There's this vibe now, especially with the Trump crowd pushing back, that it's not a regulator's job to manage the planet. But on the flip side, Dr. Shilan Arrow, he's a policy analyst, right? He said something that really stuck with me. Just because you get rid of the regulation doesn't mean hurricanes or supply chain chaos are going to vanish. Banks can ignore it, but those risks could still slam their books out of nowhere.
Exactly. It's like climate risk doesn't care about politics. If you've got exposure to Florida or California wildfires or whatever, you still got to think about what happens if disaster hits. And that's why, for real estate investors, it's never just about what the US says today. Maybe things are looser for the next couple years, but Europe, insurers, even some clients, everyone's looking for some proof you've thought about resilience.
I mean, as Dr. Arrow put it, this isn't the end of the conversation, it's just the end of one chapter. If you're in real estate, investor, lender, whatever, it's still smart to be proactive. Maybe you don't have to report everything down to the carbon atom, but ignoring the risks isn't a long-term strategy. As we've said in earlier episodes, market resets aren't about crystal balls, they're about being ready, playing defense when things shift.
We'll definitely watch for the next round, Ruby. Nothing stays the same in this space for long. Thanks for tuning in, folks. If you need advice, Nadland Capital Group is here.
And remember, just because a rule disappears doesn't mean the risk does, yeah? We'll keep bringing you the stories that matter. Layo, always a pleasure.
Always, Ruby. Until next time, take care, everyone.